What is Ijara leasing in Islamic finance? Imagine renting a car or a house, but with a twist that respects Islamic rules. That's what Ijara leasing is all about. It's a way to use assets without breaking Islamic laws against interest. In simple terms, Ijara is a leasing contract where one person, the lessor, owns an asset like a building or vehicle. They lease it to another person, the lessee, for a set period. The lessee pays a fixed rent, but ownership stays with the lessor during the lease. The lessee gets the right to use the asset and benefit from it, but they do not own it during the lease period. This setup is different from traditional loans, where interest is charged on borrowed money. In Islamic finance, charging interest is not allowed because it's considered unfair and unjust. Instead, Ijara focuses on the actual use of the asset. The rent is paid only after the lessee takes possession of the asset, not in advance. If the lessee delays or misses payments, the lessor cannot charge interest or penalties based on interest. The lease agreement clearly states how long the lease lasts, how much the rent is, and what the asset can be used for. The use must be halal, meaning permissible under Islamic law. For example, the lessee cannot use the asset for anything forbidden, like alcohol or gambling. There is also a special type called Ijara Muntahiya bil Tamlik, which means the lease ends with ownership. In this case, the lessee has the option to buy the asset at the end of the lease. Usually, this is done through a separate agreement or a gradual transfer of ownership. It combines leasing with a purchase option, but without involving interest. This method is often used for financing real estate, cars, or equipment. It allows Muslims to access assets and use them without violating Islamic rules about interest. It also shares risks between the lessor and lessee and ensures the transaction is backed by a real asset. To sum up, Ijara leasing is a way to lease assets in a manner that aligns with Islamic principles. It keeps ownership with the lessor, avoids interest, and makes sure the use of the asset is lawful. It offers a fair, transparent, and ethical way to finance and use assets in Islamic finance.